You and I, if we go down to the local coin shop, we may think about very different things when we make our decisions. But these traders on the COMEX and whatnot that trade the futures that we mistakenly refer to as the price of gold or the price of silver, they look at these economic models and these inputs, and they make decisions, and their robots make decisions on that basis. So you can't overlook that. It may be wrong. It may be that the piper will be paid eventually. The hard, long-suffering gold bugs and silver bugs will see their day. The truth triumph. But for right now, the reality of the market is determined by people not like us.
Switch towards a life of financial freedom. The Load Wallet helps you make the right switch by giving you access to a more reliable, inflation-resistant money you can trust. Money backed by silver and gold that empowers your businesses to eliminate expensive fees and settle payments instantly, and preserves your wealth for generations to come. Take back control. Download the Load Wallet today and begin building your honest money portfolio.
All right, well, welcome back to Inside the Markets, official podcast of StockPulse.com. Here, and I've got the independent speculator, Lobo Tiggre. And Lobo, good to see you. And going to see you here, I guess, in Spokane in a few weeks. And quite the market we have here. I know you like to hone into some of these precious metals. We'll get to that here, but I guess let's pull back here and look at the playing field. All kinds of geopolitical risk, all kinds of things going on. I guess give us how Lobo Tiggre sees things and the overall conditions, and then we'll move from there.
Sure. Well, yeah, I'm looking forward to the show, Rob. I'll be there in full Darth Vader force, and I hope to have some interesting, challenging, and useful things to say to my fellow silver enthusiasts. Don't forget that part. But yeah, let's start macro. And as you and I are speaking, we just had the woohoo, fantastic news of CPI finally coming down. And that's on the heels of the so-called blockbuster jobs report last week. There's a lot more data out there. There are PMIs. We're looking for PPIs. We've got Europe. We've got war. There's a lot of stuff going on. But right now, for resource investors, these are two of the biggest data inputs, and they're significant. Let's not minimize this. You and I, if we go down to the local coin shop, we may think about very different things when we make our decisions. But these traders on the COMEX and whatnot that trade the futures that we mistakenly refer to as the price of gold or the price of silver, they look at these economic models and these inputs, and they make decisions, and their robots make decisions on that basis. So you can't overlook that. It may be wrong. It may be that the piper will be paid eventually, and the hard, long-suffering gold bugs and silver bugs will see their day, the truth triumph. But for right now, the reality of the market is determined by people not like us, and they look at these things. So this is important. The appearance right now is, hard as it may seem to believe, is that the Fed may pull off a soft landing. We've got this blowout blockbuster jobs report, red hot labor market, and inflation's coming down. Look at that. It was zero for July, zero inflation. Never mind what everybody experienced in the store. Of course, that's an average. And yes, gasoline prices came down, and that offset other things like food that went up. But the official number is zero inflation for July on average. And that made the overall headline number come down, and the core number came down too, which actually the headline number didn't surprise me much, but the core dropping as it did surprise me, because that includes rent, and that includes the much maligned and latent dragging owner's equivalent rent. So this is pretty significant. I mean, this is data, whether we believe it or not, this is data that market participants believe and put into their models. And it's saying that the Fed's beating inflation. It's saying that inflation is starting to come down. And look, we haven't lost any jobs. Everything's great. So takeaways, that's a headwind for safe haven assets. I mean, clearly that for monetary metals, that's an issue. Inflation coming down for an inflation hedge is not a good thing. And if anything, I'm I'm just exceedingly pleased that the two monetary metals, gold and silver, have not tanked on this news. As you and I speaking, they're actually up on CPI day, which is quite extraordinary. Somebody's not drinking the Kool-Aid, but the vast majority is. So, sorry to say, call me Darth, whatever you like, but this is a headwind for gold and silver in the near term. Now, the more frustrating, that's not surprising. The more frustrating side, though, is that it should be a tailwind for commodities. Hey, the jobs market's great. The economy's fine. It can handle high inflation. So why isn't copper taking off? Well, actually, copper did okay, but it's not taking off. What's wrong? Well, Wall Street has a double standard. I mean, many double standards, but one of them applies to commodities and equities. And whereas the markets are willing to look through recession and say, oh, well, the Fed's gonna loosen, so we're gonna buy stocks, even if we got 2 quarters of negative GDP. Right? They're willing to do that for equities, but they won't do that for commodities. Typically, commodities actually need to bottom and start heading up before the traders start getting excited about them again. Sorry, that's not me. Don't blame the messenger. That's just sort of the way it is. But for, since we're talking in advance of the Silver Symposium, my Darth mantle and all, bottom line is actually, this is kind of bullish, or particularly bullish for silver, because if the economy does recover or doesn't melt down, and things ease up, that's actually bullish for industrial metals, which of course does influence silver more. But the way the monetary metals are holding up, and the fact that we have war and economic war and other things that are maintaining demand for safe haven assets like gold and silver, and that we still have high inflation even if it has peaked, this is, I won't say perfect storm, it's overused. But I've said for some time that silver is the win-win metal in this context. And we may well see that play out over this in near term, months ahead and the year ahead.
Yeah, it seems you kind of set up a pretty good contrarian outlook here. Metals probably should be heading down, but they've showed some strength here. So I guess, yeah, let's fast forward a little bit and give a little guidance here on how you see this playing out. I hear the perfect storm, sure, of course, overplayed, but you set up a really good scenario here, I think, for the fall.
Okay, well, let me rain on the parade first. I am an optimist, and I don't want to be accused of a cheerleader. Yeah, these guys is always just buy. They never say anything besides buy. I want to be that guy. So clearly there are headwinds. I mean, if signs of the economy improving continue, and if other signs of inflation decreasing, really if the gas prices continue falling lower and consumer expectations continue lower, I didn't mention that before, but that was actually another very key piece of data. This isn't just the Fed peddling its Kool-Aid, or the ECB, or the Biden administration, or whoever. This is the consumers. And their expectations for this year ahead, for the 3 and 5 years ahead, declined dramatically over the last month. I mean, they're not down to nothing, but the consumer is actually expecting the Fed to beat inflation, or for inflation to come down for one reason or the other. That's actually not bullish for gold and silver as monetary metals. That was the thing, really, that in the 70s stagflation made gold and silver take off. It said everybody knew that if you didn't buy something today, it was going to be more expensive tomorrow. The expectations were so high, and therefore the expectations for the purchasing power of the dollar so low, that your shoe shine boy was buying silver coins and your bartender was telling you about the gold he just bought and that sort of thing. That's not present yet. And that could be a severe headwind in the near term if things start looking more hunky-dory. That we've just had the CPI print today as you and I are speaking, but as the peak inflation bandwagon winds up and really gets into the media, we could see this hitting gold and silver in the near term. That said, real rates remain astoundingly low. I don't see them melting down in a big way. I'm just seeing, headwinds, maybe straggling lower potentially in the nearer term. It's not a prediction, just a probability. But reality does matter. And I think looking forward ahead, not making a specific prediction, but here's my outlook for what it's worth, is I do think this narrative unravels. I don't think we're all fine. I don't think we're going to get a soft landing. If you look at this blowout jobs report, the labor force participation rate went down, not dramatically, but it went down. And so if you have more jobs, but fewer people working, what does that mean? I mean, to me, it says people are working harder, and inflation is telling us they're not necessarily getting rewarded more. So this thing about, we can't be in recession because you have such a strong labor market. This is the central pillar that we get whacked with on a daily basis from the other side, if you want to look at it that way, is, it can't be bad because look how great the labor market is. Well, but if people are working harder for less real wages, if there are more jobs but fewer people in the job market, it kind of implies that people are getting extra jobs, part-time jobs, trying to make ends meet with more work just to hold on to what they have. That's not a strong job market. So I don't think things are as well as people say. I also think that, even Milton Friedman, when he said his famous always and everywhere a monetary phenomenon about inflation, he said that it takes, months, up to 18 months, year to 18 months for consequences to play out. We're seeing that now with the so-called owner's equivalent rent, right? That typically lags like that. So on the face of it, even the Fed cheerleaders should be saying, well, wait, the Fed isn't beating inflation. Something else is happening because the Fed's policies shouldn't even be noticed in the market for months or quarters ahead. So what am I saying? I'm saying I still see economic trouble. I walk down the street. I still see empty shops. I see people working harder, struggling, still in shock when they go in the food store. And that's the reality I see in the real world. And I think that's masked by some of the numbers that we're seeing, the official numbers. And then on the inflation part of it, it's going to look like inflation is not as bad for a while, I think, partly because of the base effects and partly because of the retreat in commodities, that gasoline retreat that is material. The housing thing with interest rates going up, that does matter. So there's going to be a bit of push and shove here. But the rate is going to remain high. I mean, we're not going back to 2%. I don't know if we're ever going back to 2%, but certainly not in the kind of time frame the Fed is hallucinating about. But even if it goes, we've got 8.5, if it goes to 8, if it goes to 7 by the end of the year, I think a lot of people are going to call that a big victory. It's not. 7% inflation had people out in the street protesting in the 70s. And you know what? Even 5% inflation, I picked this number because it's round and I remember the numbers. 5% inflation compounded destroys 40% of your savings in just 10 years. If you put money in the bank, if you put $1,000 in the bank, and at 5% inflation in 10 years, you've got 600, right? 40% of it is just gone. That's a lot of money that the government is taking from you, taxing through inflation. So that's a big deal. And I don't think people are going to take it. I think reality does matter. So there's my gloom and doom, but also optimistic for silver bugs and gold bugs forecast there, if you want to call it that. I think the narrative will be a headwind in the month or two ahead, but towards the end of this year, if not sooner, I think it unravels. And hell hath no fury, they say. If somebody's jilted, their emotions flip so virulently. So when Mr. Market is disappointed, I think we could see, whiplash effects, things that are going the wrong way now, turning around in, let's just say, substantial ways.
Yeah, and I guess to pile on top of that argument, as far as inflation goes, I think you have to understand what it is. First of all, to understand that there's probably no possible way that it could be curved. Because they manipulate things with numbers, or maybe they don't. We know CPI is a real number. John Williams will tell you that for shadow stats. They don't put fuel in there. People are making the argument that they have to either make a decision of filling their car up or doing something else. So yeah, I think you built a scenario there where, it will unravel, and it'll probably unravel in a big way. Then what?
Well, it's very tempting to paint great big dramatic pictures. We could probably get a great clickbait headline if I were to say X, Y, or Z. The world will end.
Save that for Spokane. But
save that for Spokane.
But tease us here.
But I remember how dire things looked after the crash of 2008. And in 2009, I remember sitting down with my mentors, my elders in the space, and none of us could see how the powers that be could pull this. Like, it looked like we've been waiting since 1980 for this whole inflation shell game and this paper, money, all the shenanigans they do with fiat currencies. We've been waiting since 1980, really, for the other shoe to drop. And we thought that was happening after the crash of 2008. It was so dire, right? I mean, if you recall, it was reported that we came within 48 hours of checks not clearing banks. I mean, serious, bad, brown stuff hitting the fan. So, we just didn't think we would recover. And you know what? We were wrong. The powers that be did kick the can down the road. They reflated the heck out of it. And they've done that even more now. So I don't want to put a time frame on it. Someday all of this comes apart and it gets really ugly. I mean, mass, social disturbances, without getting too graphic. I do think that happens. But who knows? I mean, I think the powers that be know that too. And therefore they're going to do everything possible, no matter how stupid, to prevent that and kick it down the road. We could see, the next thing after the unraveling, I think we're going to see the broader markets turn up. And by the way, I started buying stocks again last week, because I'm not saying I predicted this pivot or anything like that. I'm just saying the perceived risk that I had of an imminent market crash, after the markets didn't melt down on the jobs report and after the markets didn't respond to other body blows, I just came to think that the markets weren't going to crash in the near term. And so therefore, money that I'd been accumulated, I started deploying, mostly in uranium, by the way. So now look at this. Now we've got even more encouragement for the markets. So I'm hopeful that my recent purchases will work out. We'll see how that goes. But I think that goes for probably well into the fall. And then when it does turn around, I think we could see a real, if not a 2008 style event, a very precipitous retreat. But to answer the question, get back to how I'm answering the question, I think the powers that be will just pile in with the tsunami of easy money, helicopters, bazookas, whatever metaphor you want to use. They cannot let the market liquidate the errors of public policy. They will, I think, pull out the stops even more than we've seen already. I don't know how many times they can do that. If they fail, we get an epic crash. Head for the hills kind of crash. If they succeed, we could see, 2009, 10, all over again. Who knows? It would take somebody, I think, more than merely mortal to truly answer that question, Rob.
Yeah, I hear you. It's 2008 2.0. It seems like, what tricks do they have? You mentioned uranium there, Lobo, and I've heard this from a few guys here. I think something big might be coming in uranium. What are you feeling there?
Well, in the first place, even though silver, copper, gold, other things have corrected, most of them still, if you look at them, they're at historically high prices. Even silver at $20, silver, and I agree, silver should be higher than it is. Compared to $5, that's not bad, right? And gold at 1,800, compared to 1,000.
I think these are comfortable numbers for junior miners to work in.
For the better companies, for the actual business of mining, for the companies that have real projects or mines of merit, not the wannabes. Yeah, that's actually a point that I make. Though I have to inflation adjust that now. So I think silver needs to go higher for the mining business. More so than gold at this point. But we were talking about uranium. And what I was trying to set up, though, is that, even with copper back down in the mid threes, that's still a great price for most copper miners. Gold is a great price for most gold miners. Silver is a great price for the better silver miners. Uranium, even though it's way up over the last few years, it's still not high enough to pay almost anybody to mine it, except for the Kazakhs, and they can't supply the entire market. So uranium really is different. It is still at a price that it pretty much has to go up, or there won't be enough of it, absent a major nuclear accident, of course. So I like that a lot. That something big coming is that lot of the better uranium miners had long-term contracts that enabled them to survive the sort of, forgive the pun, but nuclear winter for uranium prices when it went down to 18. Nobody could mine at that price. They were able to survive because they had long-term contracts that set it in at higher price levels. Well, those are all pretty much expiring this year. There may be some straggler out there, but not enough to be significantly. They've been coming off over the last few years, which is, I think, not coincidental with the rise in uranium prices. But the last big ones I know, particularly in Cameco, not recommending the company, just saying, I understand that their hedges or their long, that rolls off by the end of this year. And we are starting to see signs that the end users, the people who actually buy this stuff, the utilities, they are coming to the table. We're seeing new contracts announced at higher prices, some vaguely promised higher prices, but it's starting to happen. So this is really interesting. Our friend Rick Rule likes to say, don't confuse the inevitable with the imminent. And some of his greatest investing mistakes have been making that mistake. I've done that too. I've done it enough that I've given up on imminent. I don't want, forget inevitable, forget imminent. I want happening now. And without too much arm waving, I've just done a bit of it, but without too much arm waving, there are real signs. There's evidence that this shift in the uranium market is happening now. These long-term contracts are really a key point. Spot price will fluctuate around long term, but it tracks, and the miners need higher prices. So I think we're going to see higher price long-term contracts that'll show up in spot, and that influences the prices of the uranium stocks. And this is non-negotiable. I mean, even if you hate nuclear power and you want it phased out, like that will take decades, and we've got to have it now. And the reality is it's going the other way. Even Germany, of all places, is reconsidering nuclear energy because they're burning coal, of all things, because of the war. So just, I could wax rhapsodic a lot longer, but there's just a lot of wind in the uranium sales. And the key point that you asked about is yes, there is data in the marketplace now that suggests that we're approaching a if not pivotal, but let's say inflection point. Things are looking good.
You're going to see in Spokane, or give us a little look into what you might be talking about.
It is the Silver Symposium, so I'm going to bring new data. Not a whole lot. I mean, it is what it is. But I really hope to have a rational adult conversation with my fellow silver bugs about what is and what is not happening with silver. If you want a sneak peek preview, I think I'm going to get the Darth mantle put back on me, and that's okay. I'm fine with that because I'm speaking from the data, not. And I don't know that the gold silver ratio ever goes back to where it was. And if you're hinging your investments or speculations on that premise that the gold silver ratio has to go back to even the recent ratios, in the 60 range or something like that, never mind the naturally occurrent ratio. If that's your thesis, you're not going to like what I've got to say. But that doesn't mean there's no reason to invest in silver. As we started this conversation, the industrial side here it really gives silver a way to deliver that gold doesn't have. That's why I call it the win-win. And if you look at the constraints in the copper space and how difficult it is to get new copper mines made, why am I talking copper? Well, the single largest source of silver in the world is big copper mines. It's a byproduct. And yes, it's a lead zinc byproduct as well, but it's, that's also important. But the difficulty of getting these giant mega copper projects permitted, until that changes, that's actually very bullish for silver.
Lobo, how do people follow you?
Independentspeculator.com. Thanks for the question. For the 2 or 3 people who didn't stop listening when he said that, I don't make a lot of promises, but if you sign up for our free weekly newsletter, I do promise that you will not get flooded with advertisements every day. We don't spam our people. We try to treat them with respect for their intelligence. You get 1 email per week. And if you decide you want to do business with me on my paid subscriptions, great. If not, the free list is still very valuable to me. It makes companies open their doors to me when I go on my due diligence trips to have that list, have those followers. So please help me out, sign up for the free digest. And I hope it's useful to you.
Okay. We'll have a coupon code, of course, for you too. Anyone wants to attend this symposium under your name will get a little discount. So Lobo Tiggre, independentspeculator.com. Appreciate your time. And I will look forward to seeing you here in a few weeks.
Thank you again.